Hi everyone, I'm Kevin Wang, and I'm a senior here at Wake Forest for Fintech. Alright, let me just read it by sharing my screen. Alright, so over here, I'll just zoom, but more importantly, so here's my portfolio. I only have 10 cents, which is not a big deal. Um, so what I want to show you is first of all the prices. So first of all, you can see there's a bunch of cryptocurrencies out there. But most importantly, when we're talking about Bitcoin, we have price, which is at a very strong price. You know, pre-COVID it was at like 3,000. It's bounced around all over the place. 20,000, 3,000, 10,000. But it's pretty strong, healthy market cap, I would say. Um, going to hit the 200 billion mark, hopefully in the near future. Maybe not. You know, it can crash at any point. But anyway, I personally like. I've done Bitcoin, but I also like the currencies that are dirt cheap, like XRP over here at number 3, and also at number 10, Steeler Lemons is at like 8 cents. So yeah, it's a bunch of fun, you know, just trying to follow up with everything. And then also, I want to give you some quick news updates. So the rapper Ti, he's been in a lot of weird controversy recently. So the Security and Exchange Commission is saying that he's basically done a lot of fraudulent stuff and like different things like that. And then ICO's initial coin offering. He's also said weird shit about like the virginity of his daughter last year. It's really messed up, honestly. Um, and then Apple and the Coinbase. So the Coinbase founder is having a little bit of beef. He's a little bit pissed off with what Apple's doing to, you know, they're basically making him constantly modify his app to be in the Apple Store. So it's a really good read over here. So most of my stuff is from CoinDesk and Cointelegraph. Whew. And then there's this someone news company on the block called INX. And I guess from today or sometime this week, they're starting to accept crypto payments. Also, the big deal is that it's had IPO, which is initial public offering, which is related to the New York Stock Exchange and things like that. So this is a huge deal because for a long time they've been trying to get it on the public market, which you know hasn't happened for a while. So this is probably one of the biggest things, and something that actually kind of shocked me for a second. And then the last thing I want to show you guys is FD Partners. They give really good graphics of merger and acquisition deals in the fintech space bubble, and so they're having this healthcare payment fintech like video live conference at 12 p.m. tomorrow if you don't have class. So I wanted to show those things, and there's the registration over there. But yeah, so some really exciting stuff is going on just within today in this world, and the book is really loud. Anyway, okay, I'm gonna stop sharing this. I'm gonna try to get the PowerPoint. All right, so here's opening slide, and then yeah. So I wanted to start off with more introductory stuff. If you um, are not that familiar with fintech or Bitcoin. So what makes Bitcoin revolutionary is its payment network. When you pay for a drink at the store, like a Red Bull, since you're not able to buy alcohol, you most likely pull out a debit card or credit card rather than actual paper cash. So instead of having a blue Benjamin, you're basically trusting Visa and MasterCard or even PayPal systems to transfer over your digits and money to hit you over. Either a gas station, restaurants, pre-COVID, or a source for online, you know, your typical payments. These conventional payments are owned and operated by for-profit companies, but Bitcoin isn't. It's not an enterprise or a corporation. You won't find this on the Fortune 500 list. Instead, Bitcoin runs on a peer-to-peer network. Basically, your phone or computer or iPad is talking to another screen and figuring it out. Let's use another analogy. When you're texting or sending a snap, there's always a record. Even if you delete or your picture disappears from the social media, it's never really gone. Apple or Snapchat has a bunch of computers collecting all the sent stuff for records. Bitcoin is collecting every payment anyone makes and recording it. Every transaction is processed through in seconds or minutes. This is what's called blockchain. So that's the image right there. Every transaction is like a block or chain string together, somewhat self-explanatory. Now the security and technology and coding behind it is unbelievable. but this is like the basic idea. So you might be thinking, well, life is pretty convenient. I can order something on Amazon and it comes within 1 or 2 days. Credit cards take only 10 seconds to read a check. And you're right, but here's Bitcoin's massive advantage. Do you remember setting up for your first car and bank account? If you don't, ask your parents, sibling, or roommate. But basically, at least what I had to do was dress up a bit, go in the car with the AC on, bring your license or passport, so then they know you're not like an illegal immigrant smuggling US dollars to the mafia. Then, I mean, it's not that terrible, but you sit at the banker at BB&T, Wells Fargo, Bank of America, whoever, and say yes a bunch of times. Pretend you won't do any stupid shit. But let's all be honest, we all have. So you talk for 10 minutes or half an hour, but they finally tell you your limits on your card. Like you can't go over or under a certain amount usually. Then your parents might not say anything, but they're keeping their fingers crossed, hoping that you won't blow it up. With Bitcoin, the beauty is the speed. You stay in your pajamas at home, you open your phone or desktop, go on a website or download it. Insert whatever payment option you have to create a Bitcoin wallet, then let the magic happen. I'm pretty sure I didn't miss anything, but of course, you have to wait 3 to 7 days, business days, but it's the same thing with the bank. So you have more free time and more accessibility and more fun. It's making money, and the idea of it, insanely widespread and flexible, and much, much smaller fees. Credit card companies are notorious for always demanding. So, as I mentioned all of this, I'm throwing shade at MasterCard and Visa. My last benefit is decentralization. There's no middleman, um, company, or third party watching. Putin couldn't even get into your money if he wished, unless if he sent like 100 computer apples. The point is that there's technically no one who runs Bitcoin. It was set at a certain supply in between 20 and 21 million Bitcoins around the world. You could have 0.0001 Bitcoin for all that. I mean, you already saw my portfolio. There's, however, a big debate over who the actual creator was, Satoshi Nakamoto. That's his made-up name. People have tried to hunt him down, but it never really worked. So yeah, the biggest keywords that I think are in this industry are blockchain, accessibility, and decentralization. Those three, I mean, you're going to sound pretty smart if you know those three. Other cryptocurrencies and alternative currencies like the one I showed you, XLM, Stellar Lumens, whatever, Dogecoin even, that's the new one. They all work in a similar fashion, but with very, very different purposes, and a bunch of small differences. It's kind of like how Under Armour and Nike are very different, but at the same time, they serve the same purpose. Now, for my final pitch for why I think there's so much potential for Bitcoin is that it's an open technology platform, and that can and already is becoming a hotbed of innovation. The internet is like the best example to compare it to. The internet is used for a lot of different things to compare to AI, artificial intelligence, electric cars, commercialized space travel, 5G. But yeah, back in the 80s, people couldn't understand the internet. And even like smart PhDs nowadays don't really understand Bitcoin, like my dad, for instance. The internet was unusable. And even when it got good, it took like an hour just to open up an image, unlike Google Images nowadays, or if anyone uses Bing. People thought it was ridiculous to do anything meaningful. But eventually that freedom has led us to Google, Facebook, and Amazon. So here, the key word is permissionless innovation. You can do cool things or fool around and screw around without any central authority telling you no. This means Bitcoin could possibly be the platform for building a new generation of financial services. We don't know the future for finance, especially since COVID-19 ripped it apart and shredded its pieces. But now that Bitcoin is here, we're going to figure out what happened. So let's go on to what's Fintech. So if you ever use Venmo or Apple Pay, basically it's something that you can wire money scanlessly, or with just a scan or just some fingerprints, then you've already participated in Fintech. This is a relatively new multi-billion-dollar industry. So Fintech is just finance and technology, those two words and worlds merged together. And it's a simple but very broad term to encapsulate everything. Now, usually when a word like speechless or thoughtless, has less at the end of the word, it means that it's no longer there. But cash is still a very real concept. The thing is that ever since cards came out, the volume of its circulation has decreased significantly. According to Forbes, only 8% of our green papers are being thrown around and stashed in our global economy. Regardless of what source you use, it's definitely in the single digits, 3%, 8%, 6%. I could care less. So in this case, cashless is just referring to that it's a lot less physical cash in your hands, and that this trend has become the norm. Some places in Philadelphia, but especially Asia, think of India and China, have average daily Joes walking around the streets using their phones as wallets. It's insane. They mainly scan and pay through QR codes. Yeah, any crowdfunding platform or robo-advisor like TurboTax is part of Fintech. Kickstarter and GoFundMe are also great examples. Even people donating or funding for things like Black Lives Matter, it's all encapsulated in this term. Asia really is kicking everybody's butt right now. You can think of Malaysia, Singapore, South Korea, but Europe has some very well-developed hotspots like Amsterdam and Zurich, Switzerland. And investors are buying into it. It's an amazing bandwagon to hop on, just like the Warriors in the NBA a couple years ago, or if you're like me and following wherever LeBron goes. Definitely worse and gets you, I guess. But anyway, within 1 decade alone, global investment has added over $100 billion just from 2010 to 2019. In 2017 alone, it surged up 18%. 1% of a very big number is always a huge gain. One out of every 3 people across 20 major economies report using at least 2 fintech services in the last 6 months. But this is not just happening in the G20 or other first world countries. Hop halfway across the world and a little south to Kenya. The GDP per capita is just around $1,700. A lot of these guys and girls are living under $5 a day. Regardless, a big pioneering mobile banking system is called M-Pesa. Since nearly 2 billion people around the world don't really have bank accounts, they all use their phones. The direct access has attracted 96% of households to have some way to use their capital to their advantage. One study from MIT not predicted, but found that it lifted 2% of Kenyan households out of poverty. Once again, 1% of any big number, like the money or population in this case, is major key. So major props and shout out to M-Pesa. The rise of fintech has forced traditional leaders, lenders, insurers, and asset managers to embrace new digital technologies. For example, wealth managers, if you're interested in finance or the business school, have to compete with robo-advisors now, which are automated financial planning services. I mean, talk with the robots, right? Serious Terminator Arnold Schwarzenegger vibes. But anyway, thanks to high-tech algorithms, these services are available 24/7 and can be more affordable than traditional asset managers. That helps explain why companies like Betterment and Wealthfront have already amassed billions of dollars under management. Like any growing industry, I do have to admit that there are risks. Some regulators struggle to keep up with the fast pace of innovation. While it's a very nice concept to have, the system, working, and peer-to-peer network, there are no guidelines though. Since it's not like a traditional bank, the services might not be required to set up much money in case customers default on their loans. If you're not being careful, the customer and company could both develop bad, unhealthy financial habits. That's risky written all over. Data privacy is also another major concern. As more financial services go digital, cyber attacks are becoming a bigger risk. Think of Moscow or anywhere like that, honestly. Not trying to be racist, just what I believe. The challenges facing financial technology are likely to grow as more and more businesses go digital. As our world becomes increasingly digital, like me recording on Zoom for this, so the challenges increase overall. So what I really hope is that, and I hit home, is that fintech is more than just a buzzword. Because companies are taking it more and more as a lucrative opportunity, we might as well focus on it too. So, gotta get the bread, secure the bag. Anyway, that's all I have.